Today, folks, the news driving the market this week is everything from geopolitical events driving up the Canadian dividend stock world, this kind of semi-relief rally in the light of the not-so-best geopolitical events. But we're going to talk about Google. We got ad block. Google's war with ad block is finally starting to take place. If you're one of those people using it, you know what I'm talking about. We also should dive into Tesla cutting more prices, which is a good and a bad thing, as I'm somebody that's looking to buy Tesla stock. But after these Q3 earnings, just to see how the market digests, it's none of the conversation you'd appreciate. Damn it, hit that like button, as I'm a rambling madman here on YouTube like the rest of the financial clowns. But taking a look at the TSX Heat Map today, folks, yes, outside of basically every other sector other than energy, it's not been that great realistically. I mean, C&Q's up 5.5% and Suncor is up 4.5%. The energy sectors was bring up the whole market. People are kind of celebrating, and it's not the best moral justification, because obviously this all has to do with the insane crap going on in Israel driving up oil prices, right? Oil has just been skyrocketing, which doesn't do well not only for inflation, but it doesn't do well for a lot of the economy, which is crazy for Canada to have the oil access that it does, being a powerhouse. Same with the US. And we still rely so heavily on these geopolitical countries. After the stuff with Ukraine and China, you think we become a little bit more independent from this oil volatility. But hey, you look at things like Suncor, this stock almost directly replicates the oil price if you're intrigued to play that, whereas C&Q is now becoming one of Canada's largest, companies, basically rallying beyond most companies' degree this year, up 24%, 25%. A lot of people in our chat group playing this. And if you want to chat with me and 60 other 6 and 7 figure investors, feel free to join my Patreon. You can get into our WhatsApp group that way. But this is leading, again, it's crazy how geopolitical events take place, and boom, everyone's like, how do I make money? Because here in the West, it's not my problem, that's their problem, right? So what do we do? And everybody is driving into Lockheed Martin, and I just can't picture this hedge fund manager sitting there with millions, if not billions of dollars, being like, I know what to do. I'm going to buy Lockheed and all these other war-based stocks. And you're seeing that even in the freaking CNBC. Like, it's so morally hilarious. These people go home and look at their families at night. His market strategist cautions that a war is inflationary. He says, buy energy and defense stocks. Damn it. Just load up on these companies. Forget cost averaging into index funds and maybe just a few stocks that you like. No. You got to buy oil. You got to buy defensive and war-based companies now. You got to be a warmonger and own the Band-Aids and the bombs. I mean, it's just so crazy to me that CNBC just doesn't give a crap at all. But what does this do on a global scale? What is happening over the last few years is really going to pressure a spring into what I think is going to be the greatest bull market the US has ever experienced, because not even Canada can get out of this horrible rhetoric, because unfortunately perception is reality. And when there's no good perception around China, there's no good perception around Russia, there's no good perception basically anywhere in the Middle East these days, where does money go? Obviously to the place of most protection, and that isn't going to be your Alibabas of the world. As I've said before, this reminds me of these sin stocks. Sin stocks have such a bad rhetoric that hedge funds will not touch them. Even though they make incredible money, they trade at great values, they will never see the heyday they once saw. They are pure dividend players at this point, because no money will ever flow into them on a large scale. That's the same problem with companies like Alibaba, perhaps JD.com. These companies will never see the same kind of explosive markets that the US is seeing from a lot of different, measures, but most of it being perception based. And you're seeing that in the US dollar, because investors globally, whether it's, US treasuries, whether it's just cash, it doesn't really matter what it is, it's all going into the US dollar, because we're talking about a 20-year high in the US dollar at a time where they have printed more money than anyone could have ever imagined. How does that happen? How do you print more money and just do the most inflationary thing you could possibly do to the economy coming through the pandemic, yet your dollar is hitting highs that it hasn't seen in 20 years? And it's all because of this geopolitical stuff. So this is a spring winding back, and as soon as interest rates start getting cut, I'm promising you, and that's stupid coming from a clown on the internet, don't take my financial advice, I'm promising myself that I'm making, predictory measures, that's not even a word, but measures that I believe will drive the market up in an insane way into a new bull market. And pivoting a little bit before we talk about the broader bull market, how I'm buying into it, I'm looking at a few tech companies that I'd like to buy, but I'm not really driving into them yet. I'm just watching these fascinating, stories unfold. As many of you know, Google this week hit a new year-to-date high. It's up 56%, absolutely crushing the market. And Google right now is in a war against one of its past employees that started ad blocker. And yeah, I know you are using it right now, because you've probably been hit with these messages on YouTube if you went to watch your favorite YouTubers like Caleb Hammer, and YouTube's like, hey, this violates our YouTube terms of service. You're not supporting creators. You're doing all kinds of nefarious things with this ad blocker. So if you do not disable it, you don't get to watch these videos anymore, which is a pretty crazy thing. It reminds me of Netflix increasing the price of their monthly subscription. This is only going to benefit Google in a way you cannot imagine. All things considered, it's not working on the Google search platform, but obviously most people are watching ads on YouTube. That's where their predominant ad category is growing, and AdBlock is the best ad blocker with over 60 million active users and 350 million damn downloads. And I think there's over 400 million people using some form of ad block today, which is just kind of staggering at a global level. So Google is coming after this, and it looks like it's going to work for them because let's be real, you're going to want to watch your YouTube and you're going to have to turn that ad block off. Now, it's going to be neat to see if other websites can find a way to play into this. Is you might go on websites and you might see a pop-up say, oh, you can't read this unless you turn ad block off. So Google's just kind of playing into that manner. We'll see what it does for their bottom line, but I'm very, very intrigued. And just talking about Tesla real briefly, we're getting into price cuts again. Tesla's a stock I also want to start cost averaging into, but I'm waiting until the Q3 earnings come into play. Actually, in a couple weeks, so I think a week and a half, we're going to get Tesla earnings, because you can see them balleting around this current market environment because they waited till the fourth quarter, literally the first week of the fourth quarter, to cut prices, because I don't think they wanted that baking into what they knew was going to be a crappy earnings period. And Elon stated, don't expect a good earnings period this quarter, right? So Tesla cut the US price of the Model 3Y and pushes to meet delivery goals. And this is actually a good thing for Tesla. I'm going to explain to you why. But basically, the latest cuts come as the company strives hard to deliver that record 476,000 vehicles in the last 3 months of 2023 to meet the annual target of handing over 1.8 million vehicles. And this is going to be intriguing because we're talking about vehicle prices now after the tax credits getting down to as close to $33,000 on a Model Y. You know how crazy that is, that Tesla can cut their prices this much and have that margin power to their advantage. Yeah, it's not going to hit the bottom line EPS, but what is it going to do? It's going to crush it's going to crush the competitor sales, because competitors can't make money because they can't cut prices. They don't have margin to. Not even the traditional OEMs have that kind of margin capability, and it's kind of insane how lucky Tesla's been to start as early as they did and have that first mover advantage, because no one could have expected a black swan event, higher interest rates where people are struggling to buy vehicles, and those companies can't cut the cost to make it appealing for people to buy in that higher interest rate environment. Look at Lucid Motors getting absolutely crushed right now, and basically every other auto company. There's nobody that is like Tesla in this market. Even though the earnings are going to suck, they're really proving some market dominance here, and it'll be fun to see what earnings bring. But taking a look at the broader market, as you know, I sold VDY last week on Monday, just before the market really bottomed out a bit, and I'm really glad I pivoted immediately and put most of that into the US markets, because I was dealing with tax liabilities that I didn't want to deal with over the long term. So it made a little bit more sense for me to do it. Maybe not at that time, but I'm glad, because the US markets have been performing very well for me, as my accounts have pretty much seen a nice full recovery, especially with SCHD. A lot of people starting to recognize some of these dividend stocks, which have started to outpace the broader markets. I mean, SCHD has been having a wonderful couple days as of recently. So congrats. As I've said, dividend stocks is where the most value is right now, and SCHD holds most of my favorite US dividend companies along with VDY, right? So if you're picking up these dips and you're not being scared when the entire market's falling apart, you're doing exceptionally well. I told you, it doesn't matter what you're buying, just so long as you're damn well buying something all of the time, every month, you're going to come out on this probably pretty well, because I still think the spring is winding back and things will hopefully come out in a better place. But my bet right now is the US markets are going to benefit the most, because Canada, Russia, China, not that Canada's that bad, but we're just not in the best of perception and reality. So I really think people are just going to strive to continue to buy US companies, no matter what the values are at this point. But I'd love to know what you think about that in the comment section below.